Welcome to Between Plays. All right. Today we're going to be talking about a company I fell upon, and I'm a little shocked that it actually isn't worth more than what it is. It's a online retail company, and they also have footprint. We'll call it stores. All right. We can sort of say it's like a Walmart type store. It actually is. It's a Walmart type store on the ground, but their e-commerce is massive as well. I did some research this week because when I saw this company, I was like, something's wrong here. Why is their stock so inexpensive? Now, I went and I asked the question to a whole bunch of friends, people that work in the company, and all this kind of stuff, and I was going, well, what is it that's going on with this company? I was telling him, name me some Asian stocks, online retail. One of them was able to state this company's name. And I was like, wow, you got it. That's quite incredible. I'm surprised. And he's like, well, I have a girlfriend that lives in Hong Kong, so I had an unfair advantage, which is completely true because that's probably the only reason why I guessed it. Because, listen, I've been investing for a while and I never ran across this company. Now, when I ran across this company, it was completely by fluke. I wasn't looking it up directly. So I was looking at Amazon and I started browsing through different companies, and I was like just looking through like e-commerces. And I went through Mercado Libre, and Amazon's at $3,000 something, a share. Mercado Libre is at $1,600, something like that, a share. And I was going through other ones, 2 something, 3 something, and then all of a sudden I fall on this company, JD. I don't know if you've heard of it, but JD.com is at, right now I think it's 87. I bought on the dip. I thought the dip wouldn't go so low, but Friday the stocks in the daytime, basically the whole stock market started just going down drastically, and it moved with it. I managed to get it at $89, but it went down till about 86 something, and then it came back up. Of course, naturally, I would have been happier if I would have bought it at 86 something. But let's just go through this stock a little bit. So I'll have you here on the big screen just so you can see what I'm seeing, and just for it to be a little bit more clear. So this is Wikipedia. All right, let's just get into here to get us a little bit more understanding of the company. This is its mascot over here, nice and cute. As you can see, it's a public company. It's in e-commerce. All right, it's on the Nasdaq under JD. Nasdaq's 100 is a stock market index made up of 102 equity securities, so a Nasdaq 100 component, right? Headquarters in Beijing, China. All right, online shopping, and we can see here we have in revenue, right? $82 billion in 2019, and operating income of 1.96 billion 2019, net income of 1.7 billion, and total assets of 37 billion, equity of 12 billion, right? It has over 227,000 employees, right? And launched in 1998. So they've been around a long time, as you can see here. Now, what I found was really interesting is when you look at the history over here, you see a lot of you see it changing. You see it, getting into like CDs, DVDs, ebooks, and then over here you see Tencent in March 2014. Tencent Holdings, all right, which is a Chinese multinational technology conglomerate holding company, right over here. Also founded in 1998. Acquired 15% stake in JD. You look at it more, paying cash and handling over its e-commerce business. And you see here, in order to build a stronger competitor to Alibaba Group. All right. So Tencent acquires 15% stake in JD.com by paying cash and handing over its e-commerce business. I was like, wow, that's really interesting because Tencent is really big And it's in order to build a strong competitor to Alibaba, right? JD in 2015 launched the Russian site, aims to expand its business to global. Then in 2016, Walmart sells its Chinese e-commerce business. So as you can see, Walmart had Yohyadian to JD.com in exchange for 5.9% equity stake valued at $1.5 billion. Now, in 2016, so June and October, Walmart files for a 13G, revealing it has nearly doubled its stake to 10.9%. February, Walmart increases investment JD to 208 shares or 12.1%. JD and Walmart launch first annual JD Walmart August 8th shopping festival. Achieved sales of 2017, 19.1 billion, all right, in 2017 Singles Day. Opens its first chain of high-tech supermarket. JD invests in Vietnam's online retail, all right, for 50 million. Which, if you take a look at Vietnam, they're another up-and-coming market, all right. If you look in the last 10 years, what Vietnam has done, it's quite incredible. So this is significant. JD.com invests in France and UK and wants to be everywhere in Europe in a few years. See that? So already, JD.com spins off JD Finance and raises 2.1 billion in capital raise, and now it sells groceries. Acquires Jade Palace Hotel in Beijing for 400 million. 2019, company partners with Jiangsu Modern Logistics in order to automate its logistical service. Removed all items related to Houston. All this because of General Matter posting a tweet about Hong Kong. Okay, but company files confidentially for second listing in Hong Kong, and an offering that could raise 2 billion. 2020, the company reported net profits. So look at this. Now in 2020, in August, we're doing net profits of 2.3 billion for the Q2 of 2020. Also reach a customer base of 417 million users. Announced that will be investing 830 million in its JD Health. So as you can see now, we're going back into health sector. All right. Unit provided by private equity from firm Hillhouse Capital. J.com Inc., also known as Jingdong and formerly called 360 Buy, is a Chinese e-commerce company headquartered in Beijing. It's one of two massive business-to-customer online retailers in China by transaction volume and revenue. A member of the Fortune Global 500. All right, so Global 500. So if people need to understand this, it is an annual ranking of the top 500 corporations worldwide, measured by revenue. All right, compiled annually by Forbes magazine, and major competitor to Alibaba. All right. So Alibaba run Tmall. Taobao Mall is a Chinese language website for business to consumer online retail, spun off from Taobao, operated in China by Alibaba Group. It is a platform of local Chinese and international business to sell brand name goods to consumers in Greater China. All right. Now, the company was founded by, 1998, Liu Jingdong in June 18, 1998. Retail platform went online. So the retail platform went online in 2004. It started as an online magneto-optical store, but soon diversified, selling electronics, mobiles, computers, similar items. The company changed its domain name to 360.com in June 2007, and then to JD.com in 2013. The latter purchase is understood to have cost $5 million. At the same time, JD.com announced its new logo and mascot, and it's partly owned by Tencent, which has a 20% stake in the company. So JD.com is invested in high-tech AI delivery through drones, all right, autonomous technology, and robots. Possesses the largest drone delivery system, infrastructure, and capability in the world. It has recently started testing robotic delivery services and building drone delivery airports, as well as operating driverless delivery by unveiling its first autonomous truck. So when I look at that, okay, I say to myself, why is the stock so inexpensive? You're looking at a company that's making profits in China, as they say, compared to Alibaba's Tmall, right? Where it sells its brand names and stuff like that. So it is a competitor. But now Tencent is in here. Walmart is with them. Walmart decided to sort of merge, sell off at 5.9 as you saw percent, and then they upped it. Why is the stock so inexpensive? Their balance sheet is very nice. Financial statements, sure, they were in a negative retained earnings, but you can see it just flying away. So as I said, I got in at $89. It was dipping, and the stock has been upgraded. Okay, so basically, let's go to the charts here, and you can see here it's just dipping down. I got around $89 around this mark here at 10 a.m. But it continues to dip, and it's actually going very well with the Dow and the S&P 500. If I remember correctly, it has a beta of 0.88 or something like that. The beta is 0.92 actually. All right. P ratio, the 12-month trailing is 597. So anyways, let's just go back over here. Now, it has a buy rating now of 105, depending. There's some that are saying 120. You look around, it's all different, but it's got a buy rating. So let's just go over here and let's just take a look at that. Over here we have a strong buy, all right, and buy. We have a 1.7 according to Yahoo. Okay, now it's been upgraded to buy. This over here is 2020-05-18. So it was a hold back then, but if you look at it going up, all right, this one is Stifle that put this here, but they put it to buy right here. Okay, and you got all of them basically in buy. So even Stifle has brought it to a buy. So basically everybody is in a buy right now. Let's look here, look at the revenues and the earnings. All right, here we had negative, we're in positive here. That says a lot. All right, and this is 2019. You gotta pay attention to this. Now, I don't understand how this stock is still 87.77, because if I compare it to like Mercado Libre, let's go into Mercado Libre. Okay, so when you go to Mercado Libre, you're looking at $1,851 a stock. This is NASDAQ, currency in US dollars. I'm going to show you something here. So when you go into, Simply Wall Street and you just do a quick look of Mercado Libre, their interest payments are not well covered by earnings. Okay, they're saying that the health is not so bad and the future is not so bad. But look, earnings are forecast to grow 53.43%. Now, they had 175% U.S. Retail market performance, all right? Over here, so as you go down, you'll see that they have a stable share price and volatility over time. But let's just go, you see Mercado Libre over here versus the industry, but let's just go down here. Did you guys see this? Look at the valuation of the company. The share price versus its fair value. This is the current price, and this is its fair value. It's 423% overvalued. Okay? Now a lot of people say, yes, we get that, but you have to take into account certain things. Well, it's saying that here the future growth has got 5 on 6 checks. Let's go see how many analysts have reviewed this. 23 analysts. Okay. Now it's saying the company future growth forecasts. All right, over here this is from Mercado Libre. As you can see, everything here is green, high growth earnings, and all this kind of stuff. Since we're not doing one on Mercado Libre, you look at the financial health, right? You have 4 checks, short term and everything. Debt level, it's considered high. Interest covers, it's a Melly is unprofitable. All right, therefore interest payments are not well covered. Whereas what we saw before, the other company's profitable. Okay, so I'm trying to understand why JED is still at 87%. So let's go see the institutional buyers on this company. So we can see there's massive selling over here. We did have some companies buying over there. So in the 9 to 12 months, but then in the 3 to 6 months, we get this going on. So these are the people that were selling. look at the institutions inside here. It's insane. 84.8%. Okay. Private companies. General public only owns 6.9%, right, of these shares. When you go down in here, you got Blackrock, JP Morgan, all right? You have some of these companies. Now just remember that. Some of these companies that you have over here. Goldman Sachs. All right. You can see that that stock went up. It's overvalued and all this kind of stuff. Now, if I go into Amazon, it says that they have a high debt level, but you know, it's Amazon, right? So I guess we can forgive them. But you know, just so we have here the same thing, right? Stable share price or anything like that. But this is different. How many analysts are verifying this? 46 analysts, okay? They're saying that this is their price, this is their fair value. So we're saying it's still 25% undervalued, okay? Now, we have past earnings growth analysis here. We have financial health, short-term liabilities. So financial health here is okay. There's nothing wrong here. Naturally, you know, we don't have to get into too much of this. We already know. But like here, no, maybe there's no information on it or anything like that, or not enough, you know, big purchases to show here. But institutions at 58%, general public 27%, individual insiders at 14%, public companies here. Now, why everybody remember this? Because I'm trying to understand why is it JD is at $87? Because I don't understand it. $87. Chinese online retail, 1.7 billion people. No, naturally, not everybody has the internet, but still, they brought the segment over to Russia, going to Vietnam, which is an emerging market. All right, if you go take a look at it in the last 10 years, it's quite incredible, phenomenal what they've accomplished, and the companies are moving there too. And how is it 87? Is it because we were worried about delisting? I'm trying to understand this. Look, it's beating. Look, it's killing over here. Look at this. This is quite phenomenal. We know that they went into profits. Now, let's go to Simply Wall Street and let's go take a look at them. So what we have here is trading at 0.5 below their fair value. Earnings are forecast to grow by 5.21% per year. But their earnings grew, all right, over 648% over the past year. So they don't have anything red here. We'll go into all the risk checks on this one. So they pass for everything. They fail, like it's not even red here, right? This is orange. You can have red for fail here. Do they have quality earnings? It's just orange. And if they've been diluted over the past year, orange. Everything else green. Oh, I keep on looking. So, not bad. I'm going through everything. It's just that JD is under the industry here. And why is that, right? Now, in this one here, just to let you know, there's 39 analysts, all right? So I'm going, how is it that this company is actually at its fair value? It's a e-commerce that Wallmart said, oh, here we go, 5.9%, we get rid of this and we're Walmart. And if you go into Walmart, if we go and look at any other commerce, like if I go and just take a look at, let's just go here, really quick, because I find that, this is something that we should be paying attention to. So if you go to Walmart here, earnings are forecast to decline, right? So if you go just here alone, here's a red for you, okay? But let's go back. How many analysts are here, just out of curiosity? 24. All right, 24. Undervalued. Now look at their price. Okay, 173, 144. If you go to, now forget, this is supposed to be an Alibaba competitor, right? $243, $270, right? So this is undervalued, but so therefore it should be at $270. So the other one's at a fair market value, $87. Yeah, let's go back to that. So at 80, fair value is 88.18. So it's even undervalued, but we have companies putting them at a higher amount right now. So if I go down to their financial health, 39 people, I believe we had stated, 39 analysts that we had over here. 39, right? 39 analysts, giving them a clean bill of health here. Profitability. Look at this beautiful. The debt here is at 19.5 billion yen, right? Look at the amount that they have all over the place. As you can see, everything was green anyways. We had nothing in fail. We had just 2 oranges in fail over here, which had nothing to do with the health of the company, right? So let's just go into, so same thing here as what we've seen earlier. I believe it was, I don't remember which one. I think it was Amazon, I believe that, but maybe they don't have enough, maybe there's not enough big purchases being made. Let's go into the ownership breakdown. Individual insiders, 15%. General public, 17%. Public companies, 26.3%. Institutions, 41.7%. Where do you think the money's going to go? We all know the money, Jim Rogers, Warren Buffett, Dalio, everybody knows, and everybody's saying, and doesn't matter, just go and Google it, will China surpass the US market? Look, it was at 2032 at one point, now it's at 2028 because of the coronavirus. So money's flowing into China. What do you think is going to happen to this company? So Walmart is, according to this, 9.33, but we saw at on the Wikipedia had it 12 point something, so we could just put it within that range. Tencent holding, you have 17 over here, which we had seen it was at 20%, but you could put it in that range. All right, and we have Blackrock, the Vanguard Group. We have JP Morgan. Keep on going down. You have the Teachers Insurance and Annuity Association of America. Okay, College Retirement Equities Fund, 151.53%. Hill House, 104.9%. Let's just take a look at the company itself. As you can see, it's they accept here Visa, MasterCard, all this kind of stuff. Naturally I can't read this. Can this be translated? Can I put it into English? No. They have that cute little dog in the corner as their mascot. But let's say I want to buy something. So I'll go buy this for coffee, boiling water. So as you can see, it's as streamlined and easy to use as any other company that's in e-commerce. Now naturally it has its price here. It says quantity here, so I'm sure if I click here it would be to buy it, correct? So let's just go over there, and here we are, and you'd move on, and they're giving like other things in the same area that you can purchase. Mercado Libre is overvalued by 2,000 something percent. You're looking at something like Amazon, which is undervalued, saying that's undervalued because it should be worth 4,000 something dollars a share. And then we have a company here that's just growing. That's a competitor to Alibaba that's got great financials. Money's all moving into China. You have Walmart in there. You have all these big... this company can only grow. Here, let's just... let's go into some readings here. Okay, so let's get back just a little bit over here because I find I didn't get enough into this about the company. Remember, I was saying how they this lineup over here brought it to buy. Well, I mean, you can go deeper down, and you're gonna see that the look like over here, Morgan Stanley brings it from equal weight to overweight. Okay, upgrade. All right, and if you look up what overweight means, it means that this thing is set to take off. All right. Now, market perform to outperform. All right, so it's to outperform. Benchmark to buy maintains its overweight over here. I'm going backwards, right? Hold to buy. Overweight. Barclays says it's overweight. Equal to overweight over here. Let's see if we have some big companies. So this was a downgrade. This is 2019 and 18. So we're going far back. But from 2000, here was overweight. So it starts here around 03, 01, 04, 30, 05, and then 2019, just look at it go. 2020, forget about it. It's just, you're looking at overweight, hold to buy. It's all good things. For those of you out there that doesn't understand the terminology of overweight, because there are some people that won't understand, okay? So what is overweight? An overweight investment is an asset or industry sector that comprises a higher than normal percentage of a portfolio of an index. An investor might choose to devote a greater portion of the portfolio to a sector that seems particularly promising, or an investor might go overweight on defensive stocks and bonds at a time when prices are volatile. So overweight and its opposite, underweight, are also used by analysts and commentators in recommendations to buy or avoid particular investments or sectors. Otherwise, there's no firm definition of overweight. It's simply a variation from the norm, where I may be. For example, the manager of a global technology mutual fund who foresees a downturn ahead might shift some assets, going overweight on some of the stablest blue chip companies out there. Understand? An investor with a diversified portfolio who foresees a downturn might go overweight on interest-bearing bonds and dividend-paying stocks. So you got companies that are going overweight on JD, okay? Overweight can also refer in a looser sense to an analyst's opinion that a stock will outperform others in its sector or market. In this sense, it is a buy recommendation. When an analyst suggests underweighting an asset, they are saying it looks less attractive for now than other. So this is overweight is extremely attractive. It means that they're actually putting more of their asset money in there because they believe that this is one of the stablest blue chip sort of stocks. So basically, I'm looking at e-commerce, right? And when I'm looking at e-commerce, and I'm looking at Wallmart, these type of companies, especially with the coronavirus going on, this stock being at $87 at the moment, even $89, even $90, in my head makes no sense. So this just to give you some quick examples. All right, here 2021, as you can see, are bringing it up to $105. Okay, some of them brought it to 107 over here, and that was at the end of the year of 2020. So here, let's just look at quick at CNN Business over here. So here you go, just to close this up. This is exactly what I've been trying to say. How $87 or $89 makes no sense to me. 39 analysts are offering 12-month price forecast for JD.com Inc. and have a medium target of $685. Look at this. With a high of 808 and low estimate of 591, the medium estimate represents a 681% increase from the last price of $87.75. Just take a look at that. And I'll tell you something else. In my opinion, when it gets to this, it's just going to go higher. It's just going to go higher. Look at this. Earnings per share of $1.34. Look, guys. Money's moving to China. I mean, it doesn't matter what you want to believe, right? It doesn't matter who believes or what. Money's moving to China. This has been said for the longest time. All right, here, just quickly. Let's just take a look at this quickly. Let's take a look at what, let's say, Elon Musk says here. The Chinese economy will surpass the U.S. by 2 or 3 times. Foundation of war is economics. This is for people who study history. You'll know that this is very factual. And if you just do a simple Google search, all right, China will overtake the U.S. to become the world's largest economy by 2028, 5 years than previously forecast. And if you actually look at that, it is due because of the COVID. All right, here I'll just go into here, and it's due to COVID. All right, the virus has created such destruction that the American economy is just it just needs to recover on its own. China is heading strong. You know, companies like Tencent, Soros, and Wallmart, they wouldn't be involved in this company. I mean, look at the institutional buyers. Look at the insiders that are the 15% there. Look at the companies that own the company. There's only 17% of retail investors. Well, you know what? In my opinion, this is the best time to get into this stock and overweight, right? If you look at the American economy and what they're saying about the American economy, about its debt and everything like that, why do you think a lot of the money is going to China? Because they're growing. The opposite, right? It's the opposite. They're growing. They're not in a position. I mean, if you just look at their debt versus GDP itself. Anyways, these are more technical things to get into, but I mean, in general, general economics, when you look at the general, I mean, they're poised to grow, all right, and overtake the U.S. economy, all right, and then like Elon Musk says there on what we just shown, by 2 or 3 times, okay. In my opinion, this is like, this is like a real estate investment that I had made where, it was like a hidden gem. It was like a hidden gem. So naturally, we took a position on this, and as I said, we got it at $89. Now, some people say, "Oh, well, you're losing money right now." Yeah, whatever. In the words of Warren Buffett, I'm not losing anything right now because I'm getting it at an extremely great price. It only has up to go. So $89, $87, who cares? It makes no difference. Naturally, it would have been nicer to get it at 87. Like, it would be beautiful if I would have saw this when it was like $40 or when it was at $20. Absolutely. But I think that the whole fact of it being called JD just didn't click. I didn't, and honestly, I don't know. You guys just put it in the comments. Has this stock been talked about in the United States? I mean, I've heard so much talk about WeChat, TikTok, Tencent, all these companies. Like, how many Asian companies have we probably been involved in before this show even was on? I was involved in Wimmy, holograms. My God. Anyways, so many different ones. I mean, of course, naturally you have all of the autos, like Neo, XPeng, Li Auto, and all these guys. And then there's more and more and more. And there's cattle and all. And then you have Tencent. And I don't understand. Guys, did you hear mass marketing on the stock markets about JD.com? If you have, and maybe I was blind and I didn't see it, but I don't recall, group chats and stock rooms and all this stuff going absolutely bonkers over JD as being a potential buy. I haven't even heard about it on any of the big names as being something like being so hyped or whatever. And how is it not possible? I mean, just look at where, they're putting it at. And that was what? CNN Money? Okay, and it was CNN Business. And, CNN Business, talking markets, right? Talking stocks. JD.com, very bullish on this company. I have to agree with CNN Business. I see it in the same exact light. I saw it in that light when I started researching it on Thursday. Anyways, look, go do your due diligence. Go and research the stock. naturally, we took a very nice position in it. So get out there, research, prepare, plan, execute, do what you got to do. Stay strong to the next video, and bullish on JD.com. All right, everybody, I really hope that you enjoyed that video. We'll have many more to come. Whatever you do, hit the subscribe and the like button. But hit that subscribe button in order for us to continue doing what we're doing. We need to bring up the subscriber and the memberships over here. And always remember, when you're doing any investment, whether it's in real estate or in the stock market, anything in life, at Betweenplays, what we always say, it's our motto: research, prepare, plan, execute. Okay? Stay strong.